CUFE is a small cap mineral explorer and producer with interests in a number of Australian-based projects and tenements, prospective for copper, lithium, gold, rare earths and iron ore. The company commenced shipping from its WA-based high-grade DSO hematite iron ore deposit in October 2021, and ahead of appearing at Peak Asset Management's Sky High Luncheon, CUFE's Executive Director, Mark Hancock, is joining me today on the Stock Network. Welcome.
Thank you, Lil. Thanks for the chance.
Now, CUFE recently completed a $3 million capital raising. Which of the company's exploration projects do you plan to fast track now this additional funding is in place?
Yeah, look, we've got an exciting portfolio. I guess there's probably three areas that we flagged as being the focus for the new funds. One of them is our Tennant Creek copper project, which probably call it an exploration project undersells it a little bit because it's got an existing JORC resource of 7.3 million tonnes at 1.7% copper, and the area has been mined historically. So what we're looking to do though is there's a number of exploration targets. Our drilling to date's mainly been resource development type drilling, so we want to go and drill a lot of those exploration holes in that area, and there's been a number of parties having some interesting hits there over the last 12 months, so we're looking forward to getting into that. The next one is down near Mount Marion at our North Dam project, where we've got shows from the work we've done on the ground to date of lithium in soils, and also we've had some high-grade niobium rock chips and also some rare earths. So it's an interesting fertile area down there. This will be our first drilling campaign down there. We've just been down on the ground clearing with the Heritage Group over the last few days actually, and we'll be looking to get in and drill there over the next couple of months. And then the third one, which I guess is probably the most exciting area in Australia at the moment for exploration activities, is in the West Arunta, where we've got 3 tenements up there. They're just proceeding through the grant process at the moment, and once that's completed, then we'll be obviously looking forward to getting on the ground there. But in the meantime, we've done some sort of work at a desktop level, which has identified a number of targets. So we're very keen to get on the ground and follow them up.
Excellent. Now, CUFE is one of a very select group of ASX-listed small cap mining stocks with a producing asset. Can you outline perhaps more what it's all about and its future life and cash flow profile?
Yeah, sure. No, it's been a bit of a differentiator for us that we're not regularly in the market as most juniors are. We've had that in production for 3 years now. As you mentioned, it's a high-grade product, 62-63% lump material. Reasonably high cost because it's a long way from the port, so we do need to manage the cost profile carefully, and we try to hedge the sales price to make sure that we've got that in place, and we've set the project up so that it's very flexible. If the market's not there for it, we can shut down and start up quite quickly. So in terms of life and cash flow profile, I guess they depend a little bit on the iron ore price, so it's a bit of a difficult one to predict. But what we do see is there's considerable tonnes remaining in the ground there. As we get deeper, the strip ratio gets higher and our costs get a little bit higher. So we'll continue to adjust that on a sort of a year-by-year basis as we progress through. But yeah, very iron ore price dependent, and we've set it up to be able to manage for that with the hedging and the flexibility to shut down as required.
Great. Good to hear. And finally, I suppose an outlook. What exploration deliverables do you want to achieve if you look ahead over the coming year?
Yeah, sure. As I mentioned, probably the first one in terms of work on the ground is going to be the North Dam lithium. So look, if we've had success in this first campaign, within a year we'd be starting to be wanting to define resources and get those out to the market. It's very close to operating plants, so it's one that potentially could be monetized even if it was a smaller discovery. Obviously, we prefer a larger discovery, but it's not the sort of area where you need to necessarily have a huge standalone discovery. At Tennant Creek with the copper, as I mentioned, got an existing resource there, so we'd be certainly looking to get some, within 12 months, if we had a couple of really high-grade long intercepts there, I'd be very happy with that, of course. And at the West Arunta, as I say, that one's probably a little behind in terms of the time you're getting on the ground, but certainly we'd be expecting having holes drilled by then, and obviously hoping to follow on the success of WA1 and others have been having up in that area.
Excellent. Well, Mark, thank you so much for the update, and hope you enjoy Peak Asset Management's conference that's coming up.
I'm really looking forward to it. Thanks very much.